What's happening, guys? I hope everybody had a great weekend. We've got another scan coming at you for March 21st and the week ahead. We've got some free stuff to give away, like always. All you have to do is like the video and leave your key takeaway with a timestamp. And as you guys know, we just give away free stuff. I've approached a couple of different people, such as Scans and Icon Meals. We give out IU, and we give out t-shirts, as you've seen every single week. So this week is Icon Meals, which is the food prep company that I use, and that is for Wesley Wood, as long as you're within the U.S. Give me an email, webmaster@investorsunderground.com, and we will ship you out that food. And then Ramesh Kumar for the t-shirt this week. We'll be shipping you out a t-shirt as well. Please contact me. And for everybody else, all you have to do is just leave a comment, key takeaway, and at some point, you'll probably get picked if you're consistent. Now, the market. The market, to me, it's so much easier in hindsight, when you see these things and how much they melt up. The market was getting to a point where there literally was no bids, and it was just like this unwind after unwind after unwind, volume starting to slow, where maybe they just exhausted every single seller, and literally everybody sold. Everybody that was going to sell sold, and now it's just kind of that melt up phase where things have just faded just too much that they're kind of just jumping back up on air. And we've seen that on, even like SDC, if you guys remember that failure of an IPO all the way down to the twos, Root, ROOT, and a bunch of other names that have just recently, gone straight down and literally look like they're dead in the water, and then all of a sudden they're popped back. And some of them are 50% moves off the lows in that short 2, 3, 4 day period. But realistically, they're just back to levels that they were at a week ago. So whereas we look at, some of those moves as like, wow, too much too soon, it's got to fade. Really, it's only back to a week ago. So we have to take that into consideration when we're thinking about whether or not, is this a good fade or not? And I think that's important because a lot of times people look at the percentage base and say, well, this 50%, 80% move is too much, too soon. But is it? So always ask yourself that because a lot of these that come off the lows with some crazy, crazy volume, such as DIDI, sometimes people make the wrong decision too quick, too soon, and we have that secondary move. So just be cautious. Swing market, like we were talking about last week, it's back in full gear. Everything, I don't think it's really about my trade selection, although all the big picture ideas, for the most part, I would say 9 out of 10 worked. But I don't think it has anything to do with my own personal trade selection. I think it's just literally everything is upticking right now. And it's one of those phases where you can't really do any wrong with a swing trade that's moving. Granted, you always have risk for potential offering. You have risk for different news or whatever it may be. But to me, it felt like there was just too much good, and so I was selling and selling and selling all the swings. Last week, just because I was like, this feels like too much too soon, and then they continue to go up. So we'll see what happens, but. Anyway, yesterday or Friday, I guess, really nice opportunity on IMPP. That's really an example of not letting the shiny object of the day take your focus on other names. IMPP had this nice launch off the open, and they were in dire need of money, and so they ended up having a squeeze, which was likely due to they had an F1. So they basically were offering to sell shares. People probably got a little bit too aggressive thinking that it was going to come real soon. Then it gapped up the next morning and ramped. And as soon as I saw that sell pressure, you saw me in the room, I was starting to lean verse 3 to 320 as sort of my guide. I wanted to give myself extra room just in case, but got short 290s. And as I said, I was going to cover the majority of, but not all, into the weekend. So they ended up filing after hours on Friday. So there's a good chance that this thing ends up, gapping down 40, 50, 60 cents, something like that. But a good example of not letting, that shiny object take your attention from everything. So, and it did take my attention on some things, which I'm gonna go over. So the swing or the scan topics this week was, improvements for myself, what I'd like to improve on. I did feel a little bit of, there's just a lot of stuff going on, and I wanted to participate in particular, trades and opportunities. And, I just feel like I was trading a little bit too much towards the end of last week. It started out with a huge bang, but Thursday and Friday was just not necessarily stressful, but I just felt like, I wasn't trading any A-plus setups, and I was almost not necessarily afraid to miss, but I was really focused on not missing a trade. And typically I'm more like hands off, let me just kind of wait for things to happen. And I was really like hands on, like I'm ready to go. Like, when's this going to happen? I don't want to miss this one. I don't want to miss that one. And that was both on China names as a whole, and then on MULN. I think I wasted a bunch of time kind of waiting for that trade to come, and it never came. I think I traded it right. I think I warned well. I didn't jump in front and get too aggressive or anything like that. And all the key levels that I gave held. The 237s, the 260s, the 275s, the 290s. Each and every single time it started to make a new base, when it came back and rechecked that level, once it touched under it, came right back over. And that is not a confirmation. So what I think is just to take those hands off, kind of approach. This happens sometimes. And I end up getting afraid to miss this magnitude of a setup. And I'm there from 7 a.m. to 4 p.m., which means that the trade is definitely close. But it's just not what fits with my own personality. And I felt like, I couldn't leave the desk on Thursday and Friday just in case, which is kind of what I've been trying to get away from. So anytime that there is a setup of that magnitude, I do kind of feel like that happens. But my goal is to really not do that and take a little bit more of a hands-off approach, wait for things to kind of happen, and let everybody else pay for the information like we talk about. It held way better than I would have expected. I thought Thursday was probably that peak liquidity day. But again, you could have any bias in the world, but until it actually proves you correct, you're wrong. And so each one of those levels, and we went through, and anybody that's a member, I would definitely suggest go back through the Trader's Lounge, check out the charts that I posted in the levels, and the warnings as far as, and this is, I think, the big one. When the SSR is on, nobody wants to miss that pullback. Nobody wants to miss when it unwinds. So it starts to come in and everybody just starts slamming. And nobody can hit the bid because SSR is on. So you're not going to fill many times until they let it walk down to where they want to hold it, and then they just swipe the offer. And guess what? You've just filled at the lows. And now when it goes back up to that top of the channel, you're nervous and you're covering at the top end of the channel, and it fades off. It was actually a very friendly trader, and it let shorts out every single time. And that's something, there's two things to kind of understand there. One is the time that they don't let shorts out, meaning you could trade whatever size you wanted this week and cover, and you really did not budge the name, more than a penny or two, no matter what size you had. At some point when that volume and the liquidity slows down, and you don't know when that could be, that may stop, and then you might be outsized for the particular risk at that given time. It's something like, when I was trading Kodak, not the same name at all, much thicker, but you get used to this certain range that it's trading in, And so you start to make decisions based off of that range. Then when it comes out of that range, you're way oversized for the particular risk on that given name. So the only reason that people lost, in my opinion, on MULN last week was just being stubborn. There was countless opportunities in the channel of, peeking out, coming back, peeking out, coming back. And the only reason that you would get smacked on that is just ignoring all of that and letting it go to the next level, and then letting it go to the next level, and kind of adding it, well, I'll cover next time. I'll cover next flush. All of a sudden, you have 2, 3, 4 times what you wanted, and, it's a lot higher than you expected. So same warnings, same thing that I said all week. Relax and just know that this kind of volume, remember, volume trumps all. There was over 4 billion shares traded in the last 2.5 weeks. So you're not going to miss the trade. And when it does fail, it's going to be a full day, full week type of unwind. So yes, there's going to be that initial crack, but there's going to be a rebound. And that's the rebound that I want to really participate in, because that's when everybody, kind of is no longer interested because the move happened, but there's a lot of meat left on the bone. Old runners have been coming back. RDBX, ROOT, Kodak, and SDC, things like that. Knowing what stocks used to move with others. You start to see like different indexes. BBIG ran with ATR, ran with GREE. And, 2 out of 3 of those, actually all of them, were up on Friday. And they start to kind of all, help each other and push each other along. One starts to go, the others catch up. The others start to go, the other one catches up. And so that's the kind of market that we're in right now. GME had a big move. Then AMC starts to play catch up. And then BBBY starts to play catch up. So understanding, not necessarily sectors, but these different themes, I think will help you in this current market as everything's just kind of floating up. Sector shift. We saw a sector shift last week, going from, the crude. We've talked about it. So you guys should be very familiar with understanding why sector trades are important and the difference between, a sector trade and maybe just momentum. For example, China, which is now the new sector that's popular. The difference between maybe just a small cap runner that is China that basically fuels a bunch of other small cap China names. That's different than this sector move in all of the China names. That is literal, real demand, and this other small cap momentum, which, we're typically used to. There's real stuff happening right now. Real buyers, real demand, and the supply is getting soaked. So at some point, we're going to have some sort of, blow-off move, and we're going to be able to take advantage of that. But, my thoughts right now on China, they were right on Thursday, but I fumbled the trade again. My goal was to just kind of accumulate weakness on Thursday. I figured Friday was going to be the big move, and then just kind of sit back and let these things work. And, obviously the move came Thursday. It was a pretty nice bounce off the lows, and of course I went ahead and moved on. My mistake. But the thing about that is, if I'm here thinking that dips are going to get absorbed, and I'm looking at all these Chinese names, and I'm thinking that, they're going to hold, and I'm shorting this other small cap or something like that, that is a China name, just make sure that your overall thoughts fit with, the trades that you have. Sometimes I find myself, shorting, say, a crude name. I'm looking at crude. It looks like it's about to break out. Is that smart? Probably not. So just make sure that your thought process and your trade thesis is in line with, what's happening. And if it's not, reevaluate, maybe readjust. You don't necessarily need to get out. But yeah, I thought this was going to fade, but crude looks like it's about to break out. Should I be staying full size? Probably not. Because as you guys know, BEKE and a bunch of these other names, you've seen how fast and quick they swipe and how thin they are. 40, 50, 80 cents straight up. So keep that in mind. And last thing about China would be Yang, Y-A-N-G, which is essentially same kind of thought process as like a UVXY. When the SPY starts to stabilize, the volatility starts to go down. Same deal with China, and Yang starts to unwind. So you saw me short that on Friday. That was really my true focus. Once again, covered that one a little too soon too. But point is that one's going to give you less headaches than some of this chop on the China names, because they can chop all day long, but as long as they're holding that steady trend, Yang is just going to be steady pressure. And that's exactly what it was. Ended up working out really well. So I think that's about it for what I had prepared for topics. Really the biggest thing on MULN for the week ahead, just remember everybody's doing the same thing. Everybody's waiting for the same thing. And so, yeah, there was an insider sell for 200,000 shares. There was probably millions sold on Friday. We won't find out till Monday or Tuesday. I think they have 4 days, if I remember correctly, to file. But that's a great short thesis. And you know what? If everybody shorts because there was an insider sell and they decide that they're going to hold the bid, guess what? All of those shorts are going to now come to the offer throughout the day. So just keep in mind, it's just like, all the small caps that we've talked about where shorts come in the morning, consolidates, holds trend, shorts gets blown out towards the close or afternoon. So that will keep on going until longs have a reason to sell, until the inventory comes too much for, the bid team or whoever's behind it, whoever's supporting this thing. But remember, volume always trumps all, and that's really the story here. It doesn't matter what the company does. This is just a trading vehicle. And until there is some big exchange, which we have not seen yet, expect the unexpected. But there's going to be a trade soon. There's going to be a trade close. But, my personal goal is to not sit here at 6 and 7 and 8 a.m. and 9 and, not move from my desk just because I'm afraid to miss it. Because not only am I going to be exhausted, but I'm going to miss all the other trades that are out there. And there was plenty. There was a lot of Chinese movers that, unfortunately I missed. So that's it. All right, guys. So for the second part of Scan, remember, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. Try to go over what I think makes a good trade. What would make me take the trade, what names I'm interested in, some that I'm long, some that I'm looking to get long, some that I'm looking to short, and so on and so forth. So my goal is to hopefully get you more prepared and make you feel a little bit more confident as far as, when and how a trade lines up and what makes it, a good trade. So DIDI, this one, unfortunately, this was an obvious go-to, especially this day when it pulled back and it held the second day on Thursday, which was the goal. It is what it is. But this is one of those where it extends the wings and maybe people are out on the, the wrong side. So I'd be curious to see how this, kind of pans out. I am looking for it to potentially exhaust out versus these levels. But again, you have to make sure that your thesis is in line with the rest. So if I'm looking for a short on this and Baba and Baidu are breaking out, that doesn't make sense. So you need to make sure that, the underlying, maybe your index, just like we use SPY as sort of the index for getting a feel for, is the market breaking out, breaking down, things like that. In my opinion, if you use Baba and Baidu, that'll give you, kind of that cheat sheet on what China is doing. And if they're breaking down, then, I'll probably apply pressure on DIDI. But if they're not, and I'm short DIDI, then it's not really jiving with what the rest of the market's doing. And I don't want to do that. The thing about this one is it's a lot like KC. And KC just had this huge intraday move on Friday. And I picked the wrong one. This is what I was looking for DD to do. I was looking to lean on DD in the fours, low fours, and maybe get 370s, 380s, and potentially more. But instead, it just kind of stayed in a dime consolidation pattern. But KC is a great example of what I'd want, where it just kind of goes up, goes up, goes up, has that intraday squeeze, and then starts to come back. So I'm thinking that DD could possibly do that. But again, I don't want to step in front of it. Things can be exceptionally thin, especially in this current market environment. So I want to see that blow off come. I want to see it fail to follow through and then participate on the backside. But when stocks come up like this off the lows this fast, a lot of times people think too much too soon. But like I started out by saying, we're really just back to last week, right? And this thing faded from 4 to 150, and within 10 days it's back to 450. So is it really overvalued there? Is it really overextended, or is this just a spot where shorts are going to get trapped and we're going to 6? Those are the questions you want to ask yourself, and I just want to take a piece of it, since obviously I missed the big one, which was obviously the long. KC, same deal. We had that blow off move, very similar kind of setup, right? Except it didn't go down to 150, it went down to 250. So you can kind of see how that played out, and that's what I'd be expecting or patiently waiting for on DD. But KC, I'd be looking 9:45, 10 a.m. plus trend join as well. As always, I like to kind of just look at where it had trouble, coming down, and then that becomes the kind of the area that I'd love to see it kind of pop towards and exhaust into. So I'd love to see that 650, 675 push. Ideally exhaust that. If it really wants to get going, maybe into the 7 range. So ideally, China gap up, blow off move, failed follow through. We'll see what happens. MULN, obviously the most popular type of name right now for short sellers. In my opinion, it's the same thing that we've been talking about all week. Just everybody's waiting for the same thing. Everybody's doing the same thing. So they need to convince shorts to come in, do just enough to hold them, and then push them back out. But we went over in the lounge all those key levels. And one of the biggest things, if you just draw those lines on there, you'll notice that each and every single time it held that level. And maybe it dropped under by a penny or two. But the first test back over, it went back through and held. That is not a confirmation. And a lot of people get too biased, and they think that it has to pull back. The one big thing that I mentioned in the room is, kind of understanding what the channel is, right? Where the channel is. And if you're leaning into the weakness, then you're probably covering into this strength each and every single time. But if you just flip that a little bit, and by using the strength as your entry and the weakness as either your cover or, in this case, maybe you want to let it work in case it cracks, but you're buying yourself all these extra chances. Whereas most people are slamming into 275, 280s and covering at 3, losing 20 cents each time. If you're patient and more smart with your entries, how many times did you just buy yourself another chance instead of losing 10 or 20 cents 5 or 6 times, right? So that was the conversation that we had in the room is, if you're looking to short it, there's no problem shorting into this level as long as you have a particular risk in mind, right? If you're risking towards, say, 320s and you start in the 302s where it kind of was exhausting out each time, well, yeah, if it does swipe, you're going to lose your 20 cents. It is what it is. But you're not going to lose 20 cents by chasing it down 275, covering in a panic at 3. Chasing it down 280s, covering in a panic at 3. Chasing it down 280s, covering in a panic at 3. And if you notice, that's, 50, 60, 70 cents right there. Or you take that chance and maybe one time you lost, but the other times you're scratching out. And that's the difference of being patient and not just having that FOMO of, I gotta be in, I don't want to miss the trade. And I think having that mentality, with a goal, I know SSR is on, but think about where is that optimal entry? And then put that into your kind of game plan rather than, oh man, I gotta be in. Because that's going to chop you up and it's going to make you miss the move. Let's move on to Neo. Neo, I like to watch with Baba and Baidu. It's been a great trader. It has been giving some great opportunities, but it just keeps on coming back. It's one of the strongest right now. But let this thing, ramp. And the biggest thing that I went over as soon as China started to rip that morning on the broadcast, I talked about China names just love to go one direction. Let them put in that top. And as they start to fade, that's fine to join, but don't try to find the top because they always do more than you think. And BEKE is a perfect example of that. If you're trying to fight that or find the top, I mean, these moves are just crazy. And if you try to figure it out on your own, it's very difficult. So just let these things play out and then get the meat of the move. Join the trend rather than trying to figure it out. ZIM has been fantastic the last couple days. I've been fading the strength after the weakness. So, as it starts to break down, I've been kind of leaning on pops as long as it's under VWAP. Looking to do the same. Keep in mind they have the dividend. I think the ex-dividend date is the 22nd. NCLH and UAL, same deal as all week. I'm not trying to find the top, but if and when the market pulls back, I'd like to focus on these. I do think that they're going to have $1 or $2 of pullback. I'm not going to get in there every single day. I just want to make sure that I'm familiar with those trades so that if and when the trade sets up and goes, then I'm ready to roll. Continuation side of things. Kodak's great so far. I got long on Thursday when I forget even what it was, but the article that came out, and so I got long there. I held it over. I sold the next morning a little bit too soon, but then I rebought on dips into the close on Friday. Nice close, thinking that it could end up having one of those 657 type parabolic moves. And the reason for that is it hasn't run since the whole Trump thing. There's definitely options on this thing. So sometimes you get that move that's unexpected. They've got to unwind the option players and all that kind of stuff. And 5 was a big break on the daily. So I would expect some type of crazy action, but at some point it's going to return to where it came from. So don't try to find that top, but let it play out, in my opinion, and let's see how it does. REVB, I'm still there. It's been setting up pretty well. That was the idea from about $1.09. Had that huge move to 2. Had ditched a bunch 180s and 2s, and the goal was to reaccumulate if 130 started to firm up. And it's actually been doing exceptionally well compared to how I thought it would react. I think that 2 continues to be that sort of trigger level. It's again nothing that I would ever chase. It's all about entry with these. But you almost had a second liquidity trap kind of set up. And at this point, the easy thing to kind of think about each time is you want to assume that it's going to fail, right? So you want to assume that when it tests those levels, it'll fail. You can always lock some in, and then that allows you to adjust around that core and not be so emotionally attached to it. But you want to assume that it fails, but if it starts to base at that 180 level, if it starts to base at that 210 level, then you have potential. And we've had, I'm not saying that it's going to do the same thing, but you can see how these SPACs, kind of come apart, and then they kind of go to nothing, and then somebody comes in. And we had exactly that right over here where it ended up rebounding all the way back up, which looked like nothing, but now you've got the volume. So that's a possibility where maybe it's that bottoming formation, and then you have that nice rebound. And if that's the case, then we're going to have a nice move. But again, if there's any sharp move and it goes nuts, I'm a seller. And if it starts to break trend, then I will adjust my risk accordingly. SONM, similar kind of thing too, where at this stage of the game, it's probably much higher risk than it was as far as the original entry. But dips have been being soaked so far, and it's something that you should definitely be watching in the event that it decides to take out the 140s, 150s, and really continue on. So Possible liquidity trap formation if it starts to base over those 150s, but I wouldn't assume that it's going to. I've just been very impressed with just how much the dips have been getting bought up. A couple others, STNE. I'm going to be watching dips for potential breakout. This is one of those where I feel like it goes to 16 or something like that, but I'd want to see it pull back. 1360s, 1380s start to base, see if it holds up, and then rally back towards red to green, 14 to 16 kind of range. GFAI is one of those where it should have died. It's holding better than I would have anticipated. You can see the wicks. You can see that overall on the daily here, there's like kind of an underlying buyer, right? And they're holding a higher low each time. So for me, the triggers is going to be that 125, 130 level. There's inventory at 130 if you read the filing. So that's why a lot of people are short based off that level. But if the demand, the volume comes back, just like MULN, maybe it doesn't matter. It doesn't matter if the demand, the volume is just so high, so out of whack. A couple million shares here and there may not matter. Other than that, we've got Root. We've got Root that has been coming back. This was a nice idea on Thursday night scan for Friday. Got long there. Sold the majority of it. That was sweet. SYTA, this is one of those. It doesn't mean that it's gonna go, but 125 is the first level of interest for me, and then the 150s. So I'd be watching those week opens, potential breakout there. And the last couple, HTCR, and I'm trying to speed this up because Aiden busted through the room right over here, and he's making a lot of noise. But 280s, 3s on the daily. These types of recent IPOs, when you start to see it kind of churn up, sometimes when they have a drop of PR, you'll see it and it's up, 50 or 100% pre-market, just because they don't have much history. It's done it before, so it's just something to kind of consider that if it does start to get some volume, if it starts to look good, all of these recent IPOs, relatively new IPOs rather, end up having some sort of crazy pre-market action at some point. So I'd be watching that one. There's been a buyer in the tape originally over here, and then you can see the last 3 days. So it's definitely worth watching. ATER, watching. I've been in there on the long side, and I've been adding to it. And then if it doesn't break out that day, I go back to my original size, and I'm just kind of trading it until it decides that it's not going to break out, or it does, in which case I would continue to scale into that. Last two, CISO, breakout formation. It's either going to fail really hard or it's going to break out. So I think it's pretty clear if you just kind of draw a couple lines here, 668 and 660s, right? So obviously your level is 660s. This had a huge pop into the close on Friday. Anytime you're trading a liquidity trap, if you're chasing a breakout, you're doing it wrong. We went over this before. You don't want to ever anticipate a liquidity trap by buying a breakout, because a lot of times the breakout is the actual squeeze itself, which, as we went over last time, should be your exit more often than not. So you can see just a steady buyer in the tape. That's what interests me. But for this to have any outlier move, obviously the 660 level is key. But you can see it's been getting absorbed since. And last but not least, ARTW, super thin name, nothing to be too aggressive about. But, you can see, again, the last couple scans I've said there's zero to chase here. Very low volume. But it interested me because there's literally been a buyer in here since February. So I just participated on dips since the original kind of idea, under 5. And, we'll see what happens. I didn't sell any into this rip, unfortunately. I should have, because then I could have just rebought some again when it dipped under 5 here with a lot less risk. But, again, if it's going to fail 4, I'm not interested. But it just feels like one of those where I can risk $1 from those sub 5 entries to potentially make 5, 10, 20, who knows. But it's definitely nothing that I would chase at these levels, given the volume, the liquidity, etc. So, it's something like SKYH, right, where just stops. You think it's going to stop, you think it's going to blow up, but it just never stops. And we'll see what happens with this one, but this could be one of those that goes circuit to circuit and does something wild too. So we'll see what happens, but make your list, know what you want for your China type sector, trades that you want to trade, and be safe out there. It's very thin tape. There's a lot of opportunity right now. And like I said, my main goal is to, not necessarily pre-exhaust myself, but just not exhaust myself, because I feel like I've been forcing myself to be at the desk the last couple days. And it's been nice. It was 70 degrees on Friday, and I'm over here thinking and being afraid that I'm going to miss this MULN, and that's not what I want out of this. So, if I miss it, I miss it. But there's plenty of opportunities out there, and you got to find that balance. And if it starts to take a toll on you, then you got to recognize it. Otherwise, it's going to be 10, 20 years down the line, and you're going to have a lot of regrets. So anyway, see you in the room, and have a great rest of the weekend.